something I wanted to bring up here on the show today. The hot trend right now so far in 2026 is this rotation out of large caps, out of the S&P 500 into smaller stuff, like obviously the small caps. This interesting interplay between the small caps and the large caps, as you just pointed out. This is the story so far of 2026, this rotation. So let's start out here in small caps land. You can go look for yourselves, listeners. If you go to that CME Group drop down, just go down to the Russell 2000. You'll see it's a pretty active week yet again. Fed week out there, 50,000 contracts on the tape so far for the small cap options over here at CME. A couple of interesting things have always caught my eye in small caps. First off, they're not completely dominated by all things 0-day. There is some other flow to look at, and that is the case out here again this week. The big trade out here is actually not expiring today or tomorrow, but actually expiring in 22 days, listeners, into February, late February, to the 2,500 puts. By the way, the Russell 2000, 2658 when we came into this start of the segment. So you're talking almost 160 handle out of the money puts with 22 days to go. Lighting it up on the tape. By the way, you might be wondering, what is the vol in small caps with 22 days to go? We're hanging out at a little bit north of a 20 handle, about 20 and 2/3, up nearly a point. So as you can see, as you would expect, a little bit of a vol premium between small caps and large caps. So everything lining up as you would expect there. We've been talking about the skew out there of late, and that is still the case this week. The skew is, I think to put it mildly, fairly extreme out there. The calls are pretty cheap. So if you want some upside in small caps, maybe that's music to your ears. The calls were 8.1% discounted last week. They're still pretty cheap, 7.6% discounted this week. The put skew once again remains unchanged week over week. 10.4% bid last week, 10.4% bid again this week. It's fascinating to see that premium remain out there in the small caps. Maybe no small part due to this trade that we noticed out here. It was the 2,500 puts going away in 22 days. That was dominating the tape out here in small caps at CME this week. So not your contract expiring in a few minutes, not the contract expiring tomorrow. It's something going out in 22 days, which in this modern equity landscape is nigh on an eternity, listeners. They traded about 5,000 times this week. The big day was actually Monday. Almost half of that flow going up on Monday, 1,700 on Tuesday. It does look like we might have had a bit of a vertical going up on Tuesday, 1,700 of the 2,500, 2,400 vertical. So interesting how they went up standalone 2,500 puts on Monday and then perhaps a vertical on Tuesday. Looks like maybe the other 700 going up as a vertical today as well, about 700 times that vertical trading today. Interesting stuff nonetheless. There is about 16,000 contracts open out there in these 22 days to go puts. Then, as you were talking, Uncle Mike, I was casually scanning the E-mini S&P options to see what trends are unfolding out there. Lo and behold, very similar trade lit up the chain out there as well. In fact, the number one most active contract out there is not a 0-day option, which is bizarre. We're not used to seeing that. We're used to seeing contracts going out a day or two, dominating the tape. Now, don't get me wrong. If you add up all of the flow and the contract expiring today and the contract expiring tomorrow, you got about 40% of the flow in the E-mini this week. So it still is very 0-day heavy. But the dominant strike is once again exactly 22 days out and once again to the downside. What are we talking about? We're talking about the 6,600 puts, again, expiring in 22 days. These have gone up 34,000 times in the E-mini so far this week. By the way, if you're wondering, the vol out there, 13 and a quarter. So a substantial 7-point premium between small caps and large caps on the vol front. These puts trading more actively throughout the week than the small caps. The small caps all pretty much traded on Monday and Tuesday with a sprinkling today. These traded 8,200 times on Monday, nearly 12,000 times on Tuesday, 5,300 times yesterday, and 8,800 times today. Very hot action on these 6,600 puts out there, listeners. So kind of wild stuff across the board out here. And interesting, Uncle Mike, that in this 0-day obsessed landscape. Heck, we just added more 0-day single name equity options just this week. So there's even more 0-day fun to be had if you're looking for it. Even in that environment, Uncle Mike, we've got very similar 22-day to go out of the money puts lighting up the tape in both the Russell 2000 and the E-mini S&P. Sir, what are your thoughts?
Yeah, so I mean, the 6,600 put 21 days out, that's interesting in that if we do have poor earnings over the course of the next week or so, or next couple of weeks in the S&P, a 5% down move is not out of the question for the S&P 500. So in looking at that, we were actually there as recently as last November, or close to it anyway. On the E-mini here, the 6600s do not seem that crazy or out of the question. And if it's someone that's maybe hedging their portfolio, I'm not sure that's really a bad hedge with earnings season happening. And if it's someone just being speculatively bearish, I don't think that's really a bad spot to be, quite honestly.
Yeah, I thought that might intrigue you. I was looking for some prices here. I can't find the prices straight up. A lot of put spreads going up in March as well. In that case, it's the 6,600, 6,500 put spread has traded quite a bit in March as well, but that's not what we're talking about. The big dog is actually going away in 22 days in February. But if you're wondering what that put spread is trading for in March, it's trading for a little bit shy of $11, about 10.67 out there. So maybe you like that as a 100 handle put spread in March. A little bit better either way. That's what's lighting up the tape out there.